So what moves markets faster than a Trump tweet at AM? Yes, you guessed it, the US CPI report. As traders call it, it is the market's mood swing meter. Because in seconds, it can flip the dollar from hero to zero and gold from glitter to gutter. So before you place your next trade, watch this. Hi everyone, Francois here, your market analyst here at ATFX Africa, and this is a special edition market brief ahead of the all-important Consumer Price Index release that will be released later this afternoon. Now, if you do want to come and trade that specific event live with me, you are welcome to do so, as I will be live right here on the ATFX YouTube channel at 2:15 this afternoon, taking you through the live release of this all-important report. So, can't wait to see you there. Now, let's get into, the nitty-gritty of today's CPI report. The US CPI is expected to climb to 2.9% year on year, up from July's 2.7%. Core CPI is forecasted to hold steady at 3.1% year on year, while monthly figures for both headline and core are seen rising by 0.3%. Tariffs are, the inflation wildcard here, and markets know it. So why does all of this matter? Simple. Inflation is the Fed's compass. So with a 25% basis point rate cut almost fully priced in for the next week, today's CPI print could either confirm that path or throw a spanner in the works. Hotter inflation could dampen dovish bets, while cooler prints might just swing the pendulum towards bigger cuts later this year. So now let's see how it will affect our three primary instruments for today, which is USD JPY, gold, and the Dow Jones, also known as US 30. Kicking things off with USD JPY. The dollar has been supported by safe haven demand and relatively high US yields, but if CPI runs softer, expectations of deeper Fed cuts will weigh on the greenback. The yen, on the other hand, has been under pressure as the Bank of Japan is still cautious of tightening. But even small shifts in US yields could quickly, ripple into this pair. And to this, Japan's Minister of Finance has been quietly watching yen weakness and stronger inflation in the US, which could keep intervention fears alive if USD JPY pushes towards 150. Having a look at the charts, USD JPY is currently trading near 147.4, with resistance at 148.9 and then 150.8. Support currently sits at 146.5 and then 145 flat. So what's the key takeaway here today? If CPI is hotter than expected, dollar will go up and yen will weaken. If CPI is cooler, dollar will slip and yen will claw its way back from there onwards.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Moving over to gold, which is sitting near record highs, supported by expectations of Fed easing and ongoing geopolitical jitters. If CPI surprises higher, it could reduce the urgency for aggressive cuts, boosting yields and pressuring gold. On the flip side, softer CPI would reinforce the real yield squeeze, where falling rates keep bullion attractive despite high prices. So don't forget, central bank demand, especially from emerging markets, continue to underpin gold, making dips more attractive to buyers. Having a look at the charts, gold is currently hovering at $3,630 an ounce. Support level is currently at 3,590 and then 3,440, followed by 3,340. Resistance remains at the all-time high of 3,675, with a potential push towards 3,700 in the event that CPI cools. So what are we looking for here today? Well, if we get a hotter CPI, this will lead to a yield spike, which will lead to gold pressured. If CPI cools, we will see real yield decline, which could lead to a brighter and shiny gold price. And finally, let's finish things off with equities, more specifically the US 30. So equities are currently caught in the Fed balancing act. Stronger CPI could spook investors by signaling the Fed's can't ease as aggressively, leading to fears of higher for longer policies. A softer CPI print would reassure markets that inflation is trending down, leaving more room for the Fed to cut without losing credibility. Add in corporate earnings, resilience, and tech sector momentum, and the Dow still has fundamental support. But today, the macros trump the micros. So definitely something to look out for. With that, let's have a look at the charts. The Dow Jones is currently trading near 45,515. And as you can see, stuck in that consolidation range, with immediate support sitting at 45,200, which if broken, there is further downside risk towards that 44,700. And this is if CPI runs hot. Now, on the upside, there is also that resistance sitting at 45,800, which if broken, the US 30 pair could test fresh highs if inflation cools. So again, takeaways from this. If we get a hotter CPI, stocks will wobble. And if we get a cooler CPI, we will have another rally attempt. So let's close things off with our playbook for today. Hot CPI, dollar up, gold down, equities softer. Cool CPI, dollar down, gold up, equities cheer. Markets will react first to the headline and then dig into the details. So expect volatility and, don't blink. As I said in the beginning, come and join me as I will guide you through this live here on the ATFX Africa YouTube channel. Tomorrow, we'll know whether CPI was the spark or the shockwave, which I'll break down for you in tomorrow's market brief. Either way, the session today won't be dull. And with that, we wrap up your daily market brief brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to ATFX Africa by clicking on the link in the description below and go and experience difference for yourself. That is until next time, stay sharp, stay focused, and trade smart.